Good morning, Paul Georgie from Allendale. It's November 9th, Friday morning, and we just got the USDA data. A bit of a surprise to most in the trade. The corn yield, 122.3. That was 0.2 of a bushel higher than what the trade was expecting. Put the yield total production at 10,725,000,000, about 100 million more than what the trade was expecting, which left the corn ending stocks higher at 647, so a little higher than what the trade was expecting there. In the soybeans, a bigger surprise there. We put the yield on soybeans at 39.3. That's almost a bushel higher than what the trade was expecting at 38.2. Total production on beans, 2.971 billion bushel, and put ending stocks at 140. So it didn't change ending stocks all that much, but higher than what the trade was expecting. Wheat ending stocks, 704. That was higher than what the trade average estimate was at 666. The world bean ending stocks, wheat ending stocks did increase, and they didn't change very much on the world production numbers. They kept Brazil, Argentina, and China all the same on the soybeans. Didn't change didn't adjust any numbers in the other major producing areas. And they did not adjust anything for harvested acres, and that's where the USDA told us that here about a month ago, or 3 weeks ago, that they did not and were not going to change harvested acres. They'll adjust that in January. So all in all, a bearish report. We're seeing a reaction to the negative side. We broke the soybeans further to the downside. Corn sold off some here after the report. It's sitting now on technical support, and I think once we get this news out of the way, now we've got to focus on other things, and we've got a couple key other things that we're looking at here today, and that is technicals. Soybeans took out their technical support on reaction of this report. Corn, however, still has got good technical support at 732 in the Dees contract. We believe that if we take that out, there's going to be a lot of stops building, and has been a lot of stops building below that 732 area in the Dees contract. If we hit that, we could accelerate to the downside, especially on a week end here where we're going into a Friday's close. Watch that as a critical indicator for next week's beginning prices. Other things that are happening, we've got, when you look at the corn sales from yesterday, showing that we're about 48% less sold this year than we were a year ago. Definitely not an exciting thing, and a reason for an increase in ending stocks on the corn. Other problems, the Mississippi River waterway and transportation is expected to run into problems here within the next couple weeks between St. Louis and Cairo because of the flow of the Missouri River. That is going to reduce barge traffic, or they may even close it completely because of low water levels there. So that could cause some issues here for grain movement up in the northern part of the Midwest. There's been very light farmer selling. Certainly understood the comments from farmers. They're going to keep the bin doors closed until the first of the year. Mainly because of tax reasons and weaker prices. They believe prices should go up, so that's keeping cash markets in a very narrow trading range here, or keeping support under that the market there. We're also getting weather conditions out of South America in Brazil and Argentina have become ideal here in the short term. The northern part of Brazil is getting some rain. Looks like the crop is getting in the ground there and getting off to a good start. Argentina, the rain is shut off here for a few days, and the conflicting weather models are suggesting more rain, but not as in large amounts, and then another model suggests very little rain. So look like the pattern might be changing in Argentina. Some comments out of there that producers down there are thinking about planting soybeans now because it's getting late enough in the season. It's a lot like our May time frame where producers have to decide to plant corn or soybeans, and that's what they're dealing with right now. In the livestock trade, cash cattle traded yesterday at 125. Some did, and there's still a lot holding out for better prices. The packers are bidding 125. Feedlots are still thinking they can get 127 to 128. That should come to a head here today. Cutout values down 69 cents in choice, down 21 in select. Pork cutouts up 99 cents. Pork and beef are running into some demand problems at the retail counter, and will see greater problems here the next couple weeks as we go into Thanksgiving. Turkeys will take a lot of counter space and a lot of dollars, so they will that'll hurt demand. But we think that once that we can get through this holiday, we can see some improvement in beef demand, and the storm cleanup out on the East Coast should help us get back to a more normal demand situation. And we're excited, thinking that this meat market could get a lot stronger and possibly even retest the highs, make new highs here in early December. So stay tuned and watch that very closely. Now that the report is over, another key factor that's going to be watched is the physical cliff that's being talked about on every radio station that you can imagine. It's talked about on news wires. It's an extremely important part of our economy. Washington's got to do something about it before the end of the year. That's going to take precedence, and that's going to definitely shed some direction on the traders' minds when they buy or sell here going into the end of the year. So stay in touch with Allendale. A lot of things going on. You can reach us at 800-262-7538. Don't forget to sign up for the Allendale Conference coming up on the 25th, 26th of January. And we wish everybody a very successful trading day. We'll talk to you on Monday morning. Thank you.